You think your money is safe in the bank? Think again. We imagine banks as giant, impenetrable vaults guarding our hard-earned cash. But the truth is far more complex and far more profitable for them. Your bank account isn't a storage locker. It's the raw material for a massive money-making machine. Forget the image of dusty vaults. The real action happens in a hidden system of loans, fees, and investments. Today, we're pulling back the curtain to reveal how banks really make their money, and it's not by simply holding on to yours. The primary engine of a bank's profit is a concept called the net interest margin. It sounds complicated, but the idea is brilliantly simple. When you deposit your money, the bank pays you a small amount of interest for the privilege of holding it, let's say a modest 1.5%. But your money doesn't just sit there. The bank immediately turns around and lends that same money to another customer for a car loan, a mortgage, or a business venture, but at a much higher interest rate, perhaps 7%. The difference between the interest they pay you and the interest they collect from borrowers is their core profit. It's a constant, massive flow of income generated by using your deposits as leverage. Every single day, this spread between what they pay and what they earn generates billions of dollars for the banking industry. Next up is a world that every single one of us has experienced: fees. Banks have perfected the art of charging for just about everything, creating a steady stream of revenue from their customers' daily activities. Think about your last bank statement. Did you see a monthly maintenance fee just for having the account open? Or maybe you were hit with a steep overdraft fee for a minor miscalculation. What about using an ATM that wasn't part of your bank's network? That's another fee. Need to send money quickly? Prepare for a wire transfer fee. Each of these charges, while seemingly small on its own, adds up. When multiplied by millions of customers, these fees become a colossal source of income, punishing customers for basic transactions and account mishaps. Then we have the power of plastic. Every time you swipe, tap, or insert your credit or debit card, your bank is taking a cut. For every transaction, the merchant pays a small percentage, known as an interchange fee, which goes directly to the card-issuing bank. It's a tiny slice of countless daily purchases, but it accumulates into a fortune. The real money, however, comes from credit card interest. Banks offer tantalizing rewards and low introductory rates, encouraging you to spend. But if you don't pay your balance in full, you're hit with staggering annual percentage rates, APRs, often exceeding 20%. The interest payments from millions of cardholders who carry a balance are one of the most lucrative parts of a bank's business, turning consumer debt into a reliable profit center. Beyond lending and fees, banks also act as major investment firms. They take large pools of depositor money and put it to work in the financial markets, buying and selling stocks, bonds, and other complex securities to generate returns. This is a higher risk, higher reward game that operates completely behind the scenes. Furthermore, for their wealthier clients, banks offer specialized services like wealth management, estate planning, and financial advisory. These premium services don't come cheap, adding another layer of high-margin revenue and solidifying their role as managers of money, not just guardians of it. So what are the key lessons here? First, always be mindful of the fees associated with your accounts. Read the fine print and choose a bank that doesn't nickel and dime you for every little thing. Second, understand how credit card interest works and strive to pay your balance in full to avoid feeding the high-interest machine. And finally, remember this: your money is never idle. It's always working, always moving, and always generating profit for the bank. By understanding their playbook, you can make smarter financial decisions and keep more of your own money in your pocket. The system is designed to benefit them, but knowledge gives you the power to navigate it more effectively.